Rivian provided investors of the details of the VW investment, its marketing plan update, and other vital information about business operations. This information can inform curious investors trying to understand what's going on with Rivian stock. I'll keep this introduction short and get into the details following this brief message from our sponsor. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So in talking about its VW joint venture, Rivian said that underpinning this vision of the partnership is a strategic partnership with VW Group, which made an initial investment of $1 billion into Rivian, with up to $4 billion in planned additional investment for a total expected deal size of $5 billion. That's a huge sum. Now, this is subject to the formation of the joint venture, Rivian and Volkswagen Group executing definitive agreements, and the achievement of certain milestones, and the receipt of regulatory approvals. So this is far from certain, but they've both signed intent, and VW has already made an initial investment of $1 billion into Rivian. Rivian saying that the lead program for this joint venture is expected to be our R2 platform, with an expected start of production during the first half of 2026. Now, this R2 platform, Rivian has said, will lower the average selling price of the vehicles to around $45,000 per car. Now, with the partnership with VW, what this will also do is lower the cost of goods sold of that model and thereby increase the potential profit per vehicle when this company produces these vehicles in the first half of 2026. It'll also increase the likelihood that they will actually hit this milestone in the first half of 2026 because VW can help Rivian with any of the hiccups they might have between now and then, whether it be the need for capital, more cash. VW can provide that. VW has very, very deep pockets compared to Rivian, which has burned through most of its initial billions of dollars of investment from other capital providers. Also, VW can help Rivian securing the materials they need for production of this model. Remember, Rivian is a relatively small player in the vehicle industry, and it doesn't get preferential treatment from suppliers, so that can delay production sometimes for Rivian. But with VW making the calls on behalf of Rivian, that could alleviate some of those concerns as well. So this partnership will definitely increase the probability of Rivian hitting its target in the first half of 2026 for that lower priced model, which is absolutely key for Rivian to reach sustainable profitability and cash flow levels. It's planning to produce around 57,000 vehicles in 2024. That's nowhere near the amount it needs to sell in order to reach profitability. At its current manufacturing facility, it has the ability to produce over 200,000 units, maybe closer to 225,000 units, but it's only at a fraction of that rate. At the very least, Rivian would like to maximize the output at its current facility, get up to 225,000 units annually, and that will bring it much, much closer to sustainable profitability and sustainable cash flow generating levels. Then it can think about resuming expansion. Remember, it's already started the expansion in its Georgia facility, but it paused it because it still has so much room in its existing facility. Why would you add a new facility if you're only producing 1/4 of the possibility in your existing facility, right? It doesn't make sense. So it was prudent for Rivian management to pause production of their expansion facility. But if they can get to close to that 200,000 unit mark, they can, start to think about adding that expansion facility. And once they get that facility up and running, and rumors were that that facility was going to have around 1 million unit production capacity, at that scale, then Rivian can start to approach the levels that it was forecasting with its long-term profit margins and long-term cash flow from operations levels. So still very early days, but this deal with VW will help Rivian achieve its targets, while at the same time Rivian does give up some competitive differentiation because now Rivian will not be the only one that has this technology. Rivian's technology has been boasted as some of the best technology for in-vehicle systems, and now it will be sharing it with VW. So some of VW's vehicles will have this technology. So Rivian does need to give something up in order to get this help from VW. Now, talking about their go-to-market operations, their marketing, they plan to continue to invest in spaces and service centers while concurrently increasing utilization of existing physical footprint, which includes 14 spaces and 60 service centers. Now, these facilities add as an incentive for customers to buy. The more of these facilities that customers see, the more comfortable they'll feel in buying Rivian cars. When buying a Rivian car, customers have to feel confident that if they should need repairs or service, that Rivian will be able to fulfill on that. And if they have existing facilities, customers can feel more comfortable that, okay, if I need something, I can take my car to the Rivian Center. Now, at just 14 and 60, they're not evident across the US. They are trying to conserve capital, and so they're not expanding these locations as quickly as they initially thought, which I think is prudent. Management needs to conserve capital. But to augment this go-to-market strategy, they've added salespeople and retrofitted some service centers, which are typically well located for demo drives. So they're trying to optimize existing locations and try and get more out of each of the locations they have, rather than spending more money and adding more locations. Salespeople are one of the best type of employees that a car company like Rivian can employ, especially if you're in the position that Rivian is in, which I talked about earlier, where you have the capacity to produce over 200,000 and you're only at 50,000. You want to entice customer demand so that you can increase your manufacturing up to your 200,000 level. Now, if they were up closer to the 200,000 level, then hiring additional salespeople may not be a smart thing to do because you're already close to capacity. You don't want to entice more demand when you're already near your capacity and you're still thinking about adding more capacity. But when you have so much capacity left and when you're only producing and selling a fraction of that, then adding salespeople is certainly a smart thing to do. So Rivian, I think, has done an excellent job here. I think their management decisions have been on point, from pausing production in the facility in Georgia because they just don't have demand for that much sales, to lowering the cost of goods sold by updating the manufacturing, by entering into the partnership with VW. I think Rivian has done a great job in managing the business, even though the market is difficult for EVs right now. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.